Good afternoon, traders and investors. Will back here with another one coming to you after the close here on Thursday. Hope you guys had a beautiful day. It was a red day in the markets, guys, for a change. So after a 9-day win streak by the bulls, the bears finally come in here and have a turn. But all is not bad, guys. This is a very healthy consolidation here off of a very healthy move up by the bulls. So in today's video, we're going to look at where exactly we could potentially consolidate to, not only on our major indexes here, but also on our major tech names. And we will be looking to buy the dips as the bulls have reversed a lot of the damage here on our higher time frames, such as the daily and weekly time frames here. So we will be looking to buy the dips. So in today's video, we're going to cover only two earnings here today as we wrap up earnings season. We have Trade Desk and Unity Software we're going to be looking into very briefly, and then we'll get right into our technical analysis on our major indexes as usual, our major tech names to wrap it up here. So without further ado, guys, let's get right into it. SPY down 0.78%, QQQ down 0.77%. And you can see here, guys, on the heat map, pretty red day across the board. Now, we could see this coming because in the last few days, the only major things holding up most of our indexes here, SPY, was our big tech names, guys. But even big tech today was not immune to the sell-off. You can see Tesla here, one of our major stocks to the downside here by about 5.5%. They were down almost 6.5% on the day, recovering slightly into the end of the day. But very red day in the markets here, led down by healthcare. Healthcare had a very heavy pullback today, was one of our weakest sectors in terms of the bounces that we've had over the past 2 weeks. And now they have rolled over in a significant fashion here. So on the one-day relative, you will see that everything was in the red except for tiny little green on energy here, pulling back almost 2% here on healthcare, consumer cyclicals, and real estate as well here. And on the 1 week relative, you can see, guys, that what we've been saying all week is that all week it's been a fairly mixed market. We did have some rotation within a few sectors, but a lot of things pulling back, and major tech was one of the only things holding up the SPY pretty much since Tuesday. So without further ado, guys, let's get right into our earnings, shall we? So we're going to start off with Trade Desk here. So take a look at what happened to Trade Desk in the after hours, guys. You can see that they had a negative day to start with, 2.5% to the downside, and then everything fell apart, falling almost 30% in the after hours here. Very bad earnings from Trade Desk here. The report wasn't all that bad in itself. They guided slightly lower here, but the stock had come up significantly since the start of the year. You can see here, guys, that pretty much since the start of January, this thing prior to today's earnings was already up around 82%. So anything other than absolutely outstanding earnings, guys, was going to have a negative impact on the stock, and that's exactly what happened today. Now, Trade Desk trading right in that $54 range here, $54, $55. You can see here, right here, and this is exactly where I personally want to be looking at the stock. This is one of my favorite pure form advertising plays, guys, and now we're back in this whole lower range here, lower $50 range, which we only got a chance to pick up earlier in the year, pretty much January, February, right? So now representing another good buying opportunity for Trade Desk, in my opinion, and I will be looking as of tomorrow to be writing some options potentially in the lower $50 range, maybe even high 40s for next week and potentially the next few weeks. As long as the stock stays down here, I'm very interested to buy this company. Now let's take a quick look into their earnings. What exactly happened here, guys? So we'll see. They actually came out with a double beat, as a matter of fact. They beat on EPS and they beat on revenue, as you can see right here. But it was the guidance, guys. The guidance came down a bit lower. Trade Desk shares plunged about 30% on weak guidance tied to auto and Hollywood strikes. Obviously, auto manufacturers and movie makers here are a big portion of Trade Desk's advertising business. So when they do go on strike, it does severely hinder their capacity to keep deriving contracts from these major players here, right? So here's the guide down. The company projected revenue of at least $580 million for the fourth quarter, well below the $610 million analyst estimate. So that's about a 5% lower guide here. A bit of an overreaction on the stock to the downside, in my opinion, guys. 5% guide down for Q4 should not translate into a 30% drop on share price here. But like I said, the stock has come up significantly since the beginning of the year. So obviously this one kind of got taken a bit out of proportion to the downside here, right? So they did beat on EPS and revenue. Just a quick recap here. And the thing that came in here, right, is that the guidance came in slightly below consensus, largely because the transitory cautiousness from advertisers in certain verticals such as US and auto and media entertainment due to these strikes here, guys. So once again, plays a big portion of their business here. Now, what they did come out and say here is that they didn't have, as a few other people have said throughout the quarter, guys, in terms of these struggles in the Middle East right now, at least Trade Desk said that it was not a major issue for them. So that at least that part of their business is quite protected from the geopolitical events that is happening right now here. But right, the one thing that is plaguing this company, guys, is the fact that brands have been advertising slightly less through Trade Desk. Facebook, on the other hand, had very, very decent advertising revenue and decent advertising guidance, but for some reason, Trade Desk's audience is just not capturing some of these contracts back and throwing them back at them, right? So here's the thing, right? So Trade Desk, while most independent ad tech companies have struggled to compete with Google systems, Trade Desk has built a business valued at $38 billion prior to its earnings report, largely by helping companies shift ad budgets from traditional television to the connected TV market here. So they are a major player, guys. If you don't know this company, Trade Desk, is a really pure form advertising play. They do a lot of digital media campaigns for a lot of very, very large companies in terms of they take over the entire advertising campaign and guide companies on how they should be advertising, how to spend their advertising budgets, and which channels are best suited for which companies in terms of depending on segments of the market that they do want to hit here. So unfortunately, very, very negative reaction to the stock here, but in my opinion, bit of an overreaction still. As you can see here, Meta, Snap, and Pinterest all noted a softening in the digital advertising market in their latest earnings report, due in part to the Israel-Hamas war. But Trade Desk came out and said that that was not a big factor for them, as a matter of fact here. So really, the only bad metric here was the guide down and the fact that they didn't provide guidance for 2024. So that's a big one as well. But as I've said, guys, this one is a fairly good buy, in my opinion, at the lower $50 range, higher $40 range. That's when they really start coming into it. And if you take a look here, guys, the revenues have been ever expanding over the past five years. Very, very, very good metrics in terms of revenue expansion. The revenue continues to grow in excess of 20% per year. And you can see, although this year has been slightly flat, due in part to potential recession fears here and advertisers pulling back slightly on spending, as we've heard, they are a very, very solid company in terms of their financials here, guys, growing very fast. And what I wanted to bring your attention to lastly here is the fact that they're very well positioned in terms of their balance sheet here, guys. Not a lot of debt and very decent free cash flow and large cash and cash equivalents here, guys. So they are very, very well positioned here to continue to grow. And what I like about this company is that even though they are growing at a very high rate, they are already profitable. And you guys know, in this market environment with high interest rates, I am searching for companies on a discount that are still profitable and are still growing revenue in excess of 20%. So Trade Desk definitely fits that criteria. So that's pretty much it for them. We will see how it plays out here, guys. I'm going to let the earnings play out for maybe one more day, 1 or 2 more days. And then next week, we are going to go shopping potentially for some Trade Desk, potentially in the low 50s to high $40 range. So looking very forward to that. And the second company we're going to cover, guys, is Unity Software. Unity Software absolutely got destroyed in the after hours here, down pretty much almost 15% at the low and recovering slightly, down only 12% pretty much since the close. But plus their 3% downside during the day, you have about a 15% downside on the company, guys. And the thing that's wrong with Unity Software here is exactly what we went over with Roblox the other day, is that they are exposed to the gaming industry here. They don't make games themselves. They make the platform on which developers can build games. So a bit like Unreal Engine, Unity Software has their own engine as well. And a big part here is that the company is just not profitable, guys. If you take a look at this annual revenue here, yes, revenue is expanding, but the losses are also expanding at a similar pace. So they're not able to drive net income to the bottom line. You can see over the past 5 quarters, that has been the struggle for Unity Software, is not being able to drive net margins to the bottom line here, which is one of the reasons why the stock is down significantly off the all-time highs, guys. We're talking almost 90% off of the all-time highs. It is not a buy for me, unfortunately. I know this company does great things, but until they start turning a profit, guys, especially in this market environment, I'm just not interested in this type of company. I think that there are better plays out there that do generate positive revenue. So let's go over their earnings ever so slightly here. So you'll see that they did beat on EPS here by a wide margin here, but reported a slight decline on revenue. Most of these positive, when you see a company with positive earnings, guys, and negative net income, just know that they are using tax write-offs and deductions here to boost their EPS into positive territory, although they're reporting negative net profit. So it's not a true positive EPS here. It's just a bit of accounting magic, as you can see. And that is the unfortunate thing for Unity Software. So Unity shares slide as the company posts a revenue miss and skips guidance for 2024. So one of the main factors here is that they're blaming it on the rules, on the new video game rules in China. Unity's revenue fell short of estimates here, partly because of fallout from new rules on video games in China. The company is undergoing changes, and executives aren't sure about exact timing. That's why the company held off on giving guidance. So this company, guys, is going over a massive cost restructuring, and they say it later in the earnings report here, guys. They are unsure how to best monetize their product, and that is a big problem for a company that is this big with this large of a market cap, guys, right? They have a almost $10 billion market cap, and this is a company who in their statement here today came off and said pretty much they are unsure how to manage the pricing model for their business here. So management has been trying to best figure out how to best charge clients for its products and expect to implement a new plan this quarter. And the new strategy might involve discontinuations, layoffs, and a reduction in office space here. In May, the company announced they would cut 600 employees, around 8% of their workforce here. And they also did not give guidance here. They did bring in a brand new CEO, the old CEO of Red Hat, who sold that company to IBM for $34 billion. So we will see if he can turn things around, guys, but they are going through a massive restructuring. Now, the good thing is that they have been cutting costs ever so slightly here. So you can see the revenue is expanding, guys. The company's revenue grew about 69% year over year, mainly thanks to the $2.9 billion acquisition of mobile advertising company ironSource. And this company, if you guys don't know, right, they are a very decent platform for building games. Some of the most notable games, they're very big in terms of mobile game development as well, okay? So a few of the games that they've developed is Hearthstone. They've also developed they've been the platform on which Angry Birds 2 was developed, and they also did Pokemon Go. So those are three of the main titles that were built using their platform. So it is a very known platform by developers here, but the company, the marketing of the platform is not the problem here, guys. It's how they aspire to monetize their platform better, so to attract more developers to build more games to the platform here. The good thing, though, is that the revenue is still expanding. Our results in the third quarter were mixed. While revenue came within guidance, we believe we can do better, yes. And they did slightly decreased costs as well here, guys, that we were seeing lower in the report here, right? If it's down here, right? Unity's Growth Solutions segment, which includes game publishing and advertising, contributed $355 million in revenue, up nearly 166%, guys, higher than the street account consensus, which is very good. And they have been cutting costs here by reducing their workforce and doing product discontinuations, essentially, right? So the cost structure is coming ever so slightly down. You can see this here. They've been mitigating costs in the past few quarters here, but just not good enough, guys. I need to see positive net income for me personally. So Unity, I'm going to have pretty much a pause on this company for now. Will not be touching it, even though it is at a very low price point right now. I just need to see them start delivering better net margins, and we will see how this whole revamp of the company goes in the following quarter here. They're changing CEOs. They're going to change their business plan as a whole. So a lot of company restructuring. That's why I'm currently staying away, similar to pretty much Disney, who is undergoing a very big restructuring right now, right? So any company that's going through a major restructuring in a high interest rate environment when they're not profitable is not a good look for me personally. So that's pretty much it for our earnings today, guys. Let's get right into our technical analysis for our major indexes. So SPY pulling back down 0.78% here, guys. We were always expecting the markets to eventually pull back. All good things come to an end after a 9-day rally here, pretty much back up to our previous resistance zone. So now, levels that I'm going to be looking for, guys, we're looking for the daily higher low. Anything pretty much above 410 is going to be for your daily higher low. Tons of space for the bulls, guys. I'm not worried whatsoever. We also have a beautiful weekly engulfing move. So the bulls do have a lot of space on the daily and the weekly if they do want to pull back. Keep an eye, guys. The space that I consider a very good pullback zone, guys, is the 430 down to pretty much 425 area. If the bulls come back into this area, guys, they will be filling a few of our gaps, and they will also be within the moving average territory for some very beautiful support right here. So we're just looking for the daily higher low and then daily trend change. The daily trend change is absolutely key. They have not changed the daily trend in this entire move up. So now we will be looking for the daily trend change. So they will need a bit more momentum to get through this previous resistance zone. They will have to two-step it, right? And even on the weekly, it may look something like this as well, where they pull back potentially through next week and then potentially give us another leg up here and start resuming course towards our 52-week highs. So I'm very confident in the bulls' ability to do just that. Now let's move on to QQQ. QQQ here also pulling back ever so slightly on the day. QQQ still trading above our descending channel support line, right? So they did react from our resistance zone. We've been calling this out for a few days now. This was the area to watch. And the bulls pretty much said they were exhausted at this area and started rolling over. So now we will look to see if the bulls can hold this this diagonal support line right here, which is your downtrending channel, or if they have to pull back a bit more, guys. If they look below the channel, it's not that big of a deal, guys. We do have some very big support here down in the 365 all the way down to 362 area. That's going to be your moving averages. And even on the lower time frames, guys, you can see that this was a very, very hotly contested area in the past, right? All the way down to 362.50, pretty much between these two yellow lines right there. So that is the area that I'm going to be looking for the bulls to have some support off of if ever we start pulling back, down to these levels here, guys. I do think we're set up very, very nicely for the daily trend change once the bulls find some support at lower levels. So all is well, guys. Everything is looking very healthy. This is just healthy daily consolidation, in my opinion. Now let's move on to XLF. Give me a quick second. So XLF here, guys, standing up better than most. You can see the past 5 days, XLF has been very muted. This is exactly what I want to see. I love to see sideways consolidation at the top end of a move. It lets us know the bulls don't want to give back too much of the gains whatsoever. So XLF has obviously sold off massively in relation to the most recent interest rate rise in terms of the longer term yields, right? Longer term yields obviously hurt financial institutions as clients find it tougher and tougher to take out loans with them. So if XLF continues to pull back here, guys, target this little area right here, right? 33, around the 33 level, you do have your moving averages right down here. There is an ever so slight remaining gap to be filled, and this has been a very contested area. So if we do continue to pull back, I'm just expecting a daily higher low. You obviously know that we're trapped between these two lines. These two lines are current resistance. They've been previous support, previous resistance in the past. So that is why we're kind of getting caught up here. So if we do need to take this into two steps, I'm looking for the bulls to pull back potentially around the 33 area and then give us a second leg up for a daily trend change. The weekly is still looking absolutely beautiful. It's a weekly engulfing move. So even if we have to take this week and potentially early next week off, that'll just be weekly slight consolidation here, weekly bull flag, and then we could potentially set up for the weekly trend change here. So a lot of things going on at the same time. We have daily trend changes in order, and if the daily downtrend lasts a bit longer, then we're going to be looking for the weekly trend change as well. So financials looking fairly healthy indeed. Now, healthcare not looking healthy, right? So healthcare was one of our weakest sectors in terms of the size of the bounce. They did have a very good bounce, but very weak compared to XLF, which gained back the entire move, and compared to QQQ, obviously, and SPY, which gained back the entire last leg down here. So XLF selling off here back into our area of congestion here, 127 all the way down to 125. You will see, I'll bring it again up on the weekly here. It's been a very, very contested area in the past here. So it's very normal that price is reacting from this area. So we are still looking for a potential weekly trend change on XLF, on XLV, healthcare, but they need to hold these lows, guys. 122.60 is the line in the sand level. Need to see the bulls put a stop to this bleeding. A 2% negative day when the rest of the market wasn't even down 1% is very, very, very negative for one of our weakest sectors that had the bounce. Well, they are the weakest sector once again on the way down here. So very, very negative day by healthcare here. It had a very, very healthy run up here from earnings from healthcare companies here, but we haven't had broad market participation from healthcare in quite some time. It's just a few names, a few major names carrying the entire index, right? So that is the problem with healthcare right now. We are just going to be looking for a daily higher low, but now with bears pulling back so much, guys, it could even develop into a tightening range in this area right here before potentially making a slight move higher. Something like this would be the best case scenario. Obviously, you don't want to see the bulls roll over and lose this potential daily uptrend here. They still have a capacity for the daily uptrend, but they need to start putting a stop to it, quite soon. I would not like to see a revisit of these lows. Revisit of these lows would just mean that your weekly downtrend could potentially continue all the way down to the lower area of around 120. So we'll keep a very close eye on healthcare. IWM Russell, also one of our weaker sectors, guys, right? So they were somewhat weak on the bounce, took them a while to get going, and then did most of the gains here in the last 2 days of the rally here. And now they've been selling off quite a bit more than SPY and QQQ have, right? So already back down to 167. We will be looking for a daily lower high, anything above 162, just looking for a lower high and potentially rise for the daily uptrend here. But the bulls need to put a stop to this shortly. And I'm not sure if they will be able to, guys. SPY and QQQ have barely pulled back yet. So it leads me to believe that if SPY and QQQ go into extended consolidation here, IWM may have a tough time to really hold up some of these gains. I'm crossing my fingers for them, but you guys know As long as if we keep coming back here, I will be looking to write options here in the lower 160 area. So as long as we pull back, I am a buyer of IWM all the way down here, guys. I would not be opposed to picking up some shares. I do believe that there is still some decent growth on the table for next year, especially here. So I want to position accordingly, and I want to get these shares potentially as cheap as possible. But the bulls really need to protect this, guys, because they put in so much nice work. It would be a shame to see them roll over into a new daily downtrend and just continue this massive weekly sell-off. Obviously, you guys know the bounce on IWM was one of our weaker bounces. So we are now back into the contested area here, our support zone. So we will see, can the bulls hold the line here and set the daily uptrend, or will there be a potential for a rollover? Best case scenario is if they lose too much, they just go into some potential sideways consolidation. Would not like to see them roll over for the daily downtrend. So now looking at the Dow Jones here, Dow Jones, very, very healthy consolidation. You guys can see the difference, obviously, between IWM and what we just saw on the Dow Jones right here. So Dow Jones, very healthy move, holding near the highs. Now its first little real day of consolidation, as I've been saying in the past few days. Target this area right here. 33,700 is going to be your area of congestion here. You have your moving averages acting as support. And you also have this very congested area here that's going to be acting as support as well. So I would like to see the bulls put a stop to this here, potentially reverse for your daily uptrend to the upside here, which would look very, very good on the weekly as well, right? 1, 2, 3 weekly legs down. And then we have one engulfing move to the upside. Maybe take this week as a red week and early next week, and then potentially start rallying into the new highs here and reset the weekly uptrend, and also give our bulls a new daily uptrend here. So very healthy consolidation on the Dow Jones. No red flags as of yet. Holding up very, very well as SPY and QQQ and XLF are. The real concerns here are XLV and IWM. Now let's move down to our major tech names here, guys. So major tech, Apple looking fairly good, guys. Looking fairly good. First little day of consolidation by Apple. First little red day, but really holding at the tops here, guys. So as the rest of our indexes, we are just looking for healthy pullbacks. Anything above 166 is just looking for your daily high or low. Apple bulls with tons and tons of space to do it here, guys. So we may even be looking for two things at the same time, right? If next week starts off red, well, we'll be looking for daily consolidation for the bulls here. And we'll also be looking for potential weekly consolidation to really give us the capacity to set a weekly uptrend here into the end of the year. So looking for two things at once on a lot of these things. It's going to be a daily trend change and a potential weekly trend change at the same time. But Apple bulls looking very healthy. If we do have an area to pull back into, guys, I would be targeting 180 all the way down to 178. That's where your moving averages are, and that's where price has reacted a bunch in this past area here, right? So just keep an eye on this area by Apple. If we do pull back into the 180, even 179, 78, I will be looking to once again write 176, 175 puts on Apple. If ever the price dips into this area, I will likely be buying more shares of Apple here and running the options wheel on them again. But so far, so good. Apple looking very, very healthy. Tons of space for the daily trend change and tons of space on the weekly as well for weekly trend change capacity into the end of the year. And now let's move on to AMD. AMD also looking very healthy, guys. Another day of sideways for AMD. Pretty much you can see reacting at the tops here. AMD wanting to curl over. So we will see where will they pull back into. I've been saying this previous videos. 110. Target this 110 area, guys. It's been a very, very congested zone in the past here. And obviously you have your moving average of 12 EMA coming up here as well. So if we do pull back, I'm just looking for a daily high or low and then potentially change into the daily uptrend here. So keep an eye on the size of the pullback. Size of the pullback is key. But once again, anything above 93 is just going to be a daily high or low. So bulls with tons and tons of space to make that happen. And even on the weekly, guys, weekly uptrend is started. So any pullback on the weekly, if we do get 1-2 weeks of consolidation sideways or slightly down, we're just looking for the weekly down. We're looking for the weekly high or low here and potentially return to your new weekly uptrend here and reset this monthly uptrend back in motion here to the upside here. AMD looking very, very, very healthy, guys. If AMD does pull back into the 109, 108 area potentially over here, I'll be looking to write maybe 106, 105 puts because it's gonna, if the market does come down here, guys, I think the bulls will be able to buy that back up quite heavily. So AMD looking very good. Amazon also looking very good, pulling back 1%, but Amazon bulls with a massive amount of space to be working with here. If we do continue to pull back, any single pullback here, anything above 119 is just looking for a daily high or low. For, once again, your daily trend change here, bulls looking very healthy. If we do pull back, target this area right here, 136, 135. That starts to be the area of the moving averages, and it is the past area here on Amazon. You've had a lot of action here in the 135 range, right? So take an eye with the price does pull back here, I do think it's a great dip buying opportunity for the bulls here, and I do think they will react heavily from this area. I'll remind you, Amazon as well is looking very healthy on the weekly. Weekly downtrend was canceled by the bulls, so if we do get 1 or 2 weeks of pullback, potentially, we're just looking for a weekly lower high. Higher low compared to this low right here, and then for the furtherance of a new weekly uptrend on Amazon. So Amazon looking very, very healthy indeed. We're already back up to 52-week highs pretty much. So very normal that Amazon bulls just need to take a little bit of a breather and accumulate some more buying power here and start rushing back to these new 52-week highs. So Amazon looking very, very, very healthy, if I do say so myself. Big tech holding up better than most. Now let's move down to Meta. Meta also with a very healthy day, guys, consolidating sideways. Meta not giving back any of the gains so far whatsoever. So Meta still looking for the daily higher low. Meta actually hasn't pulled back at all yet. So same thing stands as the rest of the past week, all the videos we've made on Meta so far. Anything above 279 when the pullback does happen is looking for a daily higher low. Now you have a very good base of support down here. You have the moving averages in the 312, 310 area. And you also have this contested zone between these two yellow lines, 308 all the way down to 300 pretty much. This was the very, very congested zone in the past. So I do expect bulls to put up some very, very good support if we do dip back into there. So Meta, no red flags whatsoever. Bulls are in full control of the daily time frame at this point. Just need to set the higher low and then daily uptrend set. And the weekly is looking very, very beautiful as well, as you can see, right? I apologize for the chart going all the way over there. So the bulls looking very, very healthy on the weekly as well. We are just looking for a potential set of a weekly uptrend into the end of the year here. And you guys know Meta has been one of our lead bulls pretty much all year, and that hasn't changed. Meta and Microsoft are looking pretty much the best right now. Amazon is looking very, very good as well too. Actually, let's move on to Google now, since we didn't cover Google. My apologies, guys. So Google finally pulling back ever so slightly here, guys. So Google coming back here, as we've been saying, as soon as this move tops out, we're looking for the daily higher low. Google bulls have put in enough of a move here to where we've moved up over pretty much 62% of this most recent sell leg down here. So bulls looking very healthy for the capacity at a daily trend change. Where is the support going to come in? Between these two yellow lines, guys, right? So we are having some moving average support. The 12 EMA yellow line is right here. And these two lines have been pretty much support in the past, and resistance as well. So I do expect it to play out somewhat the same here. We're going to be looking for the bulls to put a stop to this in this whole area, 130 down to 128, and then rise for a new daily uptrend. The Google bulls have done a great job here of recapturing a lot of this weekly move off the downside off of earnings. So we'll see if they can keep that going here. But all in all, Google looking very healthy. No red flags on the stock yet. If we crash through this area, then I start to get concerned, guys, because then you set yourself up for the potential furtherance of a weekly downtrend here, and you set up, right, this is always going to be a potential for a daily downtrend, which is why the bulls need to hold this low right here and need to reverse this into a daily uptrend. So that is exactly what we're going to be looking for on Google. If Google does fall into this sweet spot area here, I will be looking to potentially add some shares. 128 down to 126 is the area that I want them. Now let's move on to Microsoft. Microsoft finally pulling back after such a monster rally. Microsoft looking very, very, very healthy, guys. No red flags on this chart whatsoever. Just looking for a daily higher low at this point. Anything above 327 is just going to be for a daily higher low, looking for daily uptrend continuation here. Microsoft bulls, some of the healthiest bulls in the entire market here. No red flags with the company at all. We were just a bit overbought, as I've been pointing out in the previous days here. So normal that we do get some pullback. If we do pull back, guys, I'm targeting this area right here, right? Around 346 to 350. This whole area right here. We have our 12 EMA, and we have your previous resistance starting to act up right here, right? And this whole area, once we come back in here, this is going to be your previous all-time high area of congestion right here, a bit of resistance in this area. So normal, if we do pull back, I expect the bulls to put up a fight coming into the 350 to 346 range. No red flags whatsoever, just looking for daily uptrend continuation after this pullback is finished. And you guys know on the weekly is ridiculously bullish, guys, right? They have now set the weekly uptrend here. So even if Microsoft takes the next week off and consolidates a little bit, we're just looking for a weekly lower high for continuation here in the end of the year. Now, NVIDIA has been very surprising, if I do say so myself, guys. Very good run by NVIDIA, and they did something today that we've been talking about on the channel for the past week, okay? So not only did they put in a pretty much 10-day win streak here on NVIDIA off of our lows, we will be potentially looking for a little bit of a pullback. As soon as this move tops out, we're going to be looking for a pullback here, guys. Target these area right here. 445, 440 is your moving averages right here. You do have some previous areas of congestion right here. So keep an eye on this little area. 455 down to 440 is going to be the area where they pull back into. And why is it notable what they did today? Because they canceled the weekly downtrend we are now potentially setting up for a weekly uptrend reversal here into earnings in 2 Tuesdays, right? So not this next Tuesday, the one after. It's going to be NVIDIA earnings. Look, we flushed the 475 level, closing above it now. Or sorry, closing above it, opening above it today and now closing below. So we did break above our previous lower high right here. So you can see this, right? Lower high, lower low, slightly lower low. So we're setting up for the weekly downtrend. Now the bulls have completely reversed this. We're now engulfing those previous moves. So NVIDIA looking very, very, very good, if I do say so myself, guys, right? Setting up a lot of space for a weekly trend change, potentially after earnings here. So even if NVIDIA pulls back pretty much in all of next week into earnings after that, they're setting themselves up very, very nice for a beautiful earnings report. If earnings are to the upside here, we could get a weekly breakout. And if ever earnings are negative, we have created a lot of space, guys, off the danger zone. The danger zone is pretty much the 404 down to 400 area. Cannot see the bulls lose that, or they would lose the higher time frames in terms of the monthly time frame here and also the weekly time frames as well here. So bulls doing a very, very good job. Now pretty safe in my opinion here. So we will be looking the bulls to the bulls to put up some defense in the higher 450 area here. And I want to see them hold in this area before earnings here to give them the best chance as possible. And now our 3 last ones here, guys. Tesla. So Tesla, very bad day on Tesla today, if I do say so myself here, down 5.5%. That is off initiation of a new bearish analyst here in the form of HSBC Bank. They said that although Tesla is a very nice growth stock, they believe it is a bit overvalued because the premise of the company, they do believe that they're more than simply an auto manufacturer, but they believe that the robotics division, their energy division, and their AI division, notably full self-driving here, is going to take longer than expected to play out. And as a result, that those things have already been baked into the valuation, and HSBC does not believe that they should be baked into the valuation when their time to completion is potentially far out in the future. So they initiated some coverage with a price target of about $145, and that pretty much dropped the stock here today. As you can see, guys, it sold off, 5.5%, was down almost 6.5% on the day. Really waterfall drop right off the open here, getting into hourly oversold conditions almost immediately here and not giving up quite some bit. And this is one of the reasons why I didn't play Tesla, guys, because, well, not because I knew there was going to be analyst coverage on it, but you guys know what I was saying on Tesla the rest of the week. When the market wasn't pulling back here, the market kept rising and Tesla stopped rising. They just stayed flat. So I figured that if the market were to drop, would have a decent red day like today, then Tesla would be dropping significantly, which is exactly what happened today. Coupled with the negative analyst coverage here, you ended up with a 5.5% day to the downside here. So I will be looking for some Tesla shares. I will be looking to write options potentially for next week below $200, maybe 200 to 190. We will check on the premiums, but I'm definitely a buyer of Tesla down here. Tesla looking desperately to save these 194 lows. So we're looking for the daily uptrend here, but Tesla needs to put the brakes on here very, very shortly here, covering this nice little gap here. So at least we've done that today, but now we need to hold and we need to set the daily uptrend here. So I need to see the bulls really step in and hold this area. Don't need to V-shape this right away, but I need them to hold this area, not drop too much more. And eventually when they're ready, set the daily uptrend here, because we are looking for first a daily uptrend reversal here since pretty much our earnings. And also to the weekly here, we are in a weekly downtrend. So we're just looking for a weekly lower high. I would have liked to see them bounce up to 235, 240 to give themselves a better chance, but we only got as high as 225. So now a bit too close to the lows in my opinion. Very, very close eye on Tesla in the next few days, guys. These lows right here, 195 are key. Flush these and you lose the potential of a daily uptrend here, and your weekly downtrend simply continues. And then your areas become 185 all the way down to 170 pretty much. So keep a very close eye on Tesla next few days. And now Palantir and PayPal. Palantir also pulling back ever so slightly today, 1.19%, but not too much in the grand scheme of things, guys. Not pulling back too much off of earnings. And they are holding this previous area that we've been targeting all week. I've been mentioning this area, guys, at around 18 all the way down to 1770, right? So it's been acting as a very, very good area of support. Bulls don't want to give back too much. It was a beautiful earnings report by Palantir here last Thursday pretty much, so they haven't given back any of the gains. Still holding them as usual. We are just looking for a daily higher low. Still expecting this area to be very, very good support here all the way down to $17. So this is also in line with our moving averages. So Palantir does have some room to give up a bit more if they bulls want to get some more accumulation going here. We could have a little dip into this lower $17 range, and then they are still set up beautifully for the potential daily trend change. Tons of space to create that. And also on the weekly, guys, weekly is looking very, very bullish as well. As you can see right here, weekly uptrend is more than confirmed at this point. So any pullback, even if Palantir ends red this week, which it probably will, and even into next week, that's fine. We do have a bunch of support down here, as I was saying, in the $17 range, just looking for a weekly higher low for a weekly continuation into the end of the year. No red flags on Palantir and as a company or on a technical basis as a whole. And now lastly, PayPal here. PayPal pulling back 1.5% as we are still looking for our daily higher low, guys. Anything above 50.25 is just looking for your daily higher low. Need to see the bulls hold this though, right? We've been reacting beautifully from this 12 EMA, holding it as support, which is something we haven't been able to do all the way pretty much since past August, right? We haven't used this 12 EMA as support. So bulls are holding this fairly nicely, but not immune to the market sell-off. PayPal only had pretty much 2 good days after their earnings and pretty much has been flat ever since. And volume is pretty much back to normal here. I would have liked to see volume pick up as more and more institutions initiate coverage or initiate positions into the stock, but it's just not happening as of yet. So PayPal recovery story taking a bit longer. We are looking for that daily trend change. I will need to see a break of 56.74 to make that happen here. So as of now, we're still just looking for the pullback. Bulls still have a little bit of room to give here, but I would not like to see them pull back into the $52 range. That's a bit too much give back in my opinion, and it would take the bulls significantly longer here to reset the trend to the upside here. So we are desperately looking for this daily trend change on PayPal, something that we have not had happen since back here in and since this previous August here. So not a very good day on PayPal here. Pretty much just holding flat with the last few days of trading. Need to see this daily trend change. So that's pretty much everything I had for you guys today. If you appreciated the video, consider dropping a like. I really appreciate it. Also consider subscribing to the channel if you're new. We do these every day after the close, Monday to Friday. And lastly, if you have any comments, guys, any questions on macro, technical analysis, options, stocks, definitely drop them down in the comments. If you want me to cover a specific stock, leave it down in the comments as well. I would love to do that for you guys. I hope you appreciated all this earnings coverage, wrapping up another beautiful earnings season. And just a quick recap, guys, we are bullish. All of the longer term timeframes are now bullish, guys. The monthlies are extremely bullish for monthly continuation. Weeklies are engulfing moves, tons of space for the bulls to reverse these on the weeklies. But now we are just waiting for this inevitable daily pullback for your daily higher low and a daily trend change. So everything is looking good, guys. This is a beautiful buy the dip opportunity after our recovery here and after Powell has pretty much given us the green light to start buying equities again as your yields, longer term yields, are now starting to finally fall. So very, very good indeed here, guys. So I will see you tomorrow after the close on Friday. Take care and peace.